live. Hey, welcome everybody. This is Keith Pitch. I'm joined in studio with
Darcy Hardy. And
we are joining you live for another great show of Realty Experts, where we're going to jump into some rate discussions, a huge $90,000 present for all you out there, and a little myth buster that we're going to talk about a little later. So hang in there, enjoy today's Realty Experts, and there we go. What's new with you, Darcy?
Sweet. Well, I was just thinking I have a lot of Christmas shopping left to do.
Okay, it's the 14th. Hey, yeah. That is 11 days.
Yeah.
11 days, that's
Stuff's definitely
going
to get to the other coast by Christmas, no problem.
Oh, you got to ship stuff?
Oops.
Never mind.
How's your Christmas shopping going?
Just like that. Mm-hmm. So since I'm in town, I literally flew in this morning and I put an extra duffel bag in my checked baggage.
Oh, yeah, that makes sense.
Because I'm going to Bell Square after our show here today, and I'm going to go get all my Christmas shopping done, so I have 2 bags. So okay. I planned ahead. I don't have to ship anything, luckily. So that's a huge favor and a huge thing for me.
Bonus.
So, yeah, we just get to go shopping right now. So I'll be done this evening. Today, done. 14th of December. I think I stretched it out to the 22nd last year. So
that's not that bad. I've had it all done before Thanksgiving but then I find I tend to buy stuff last minute.
Yeah.
And it just overboard.
It's like anything else in life. I think Christmas presents are best if you plan it out. And because I fall prey to that same situation. Like, oh, that'd be totally cool.
Yeah.
I think I should get that, and I should get that. As opposed to like, if we're business planning, we're like, oh, we're gonna do this, and we're gonna do that marketing thing, and we're gonna do this thing, and you just go do it, and that's where you leave it.
Exactly. Exactly. It is what it is. But
it is what it is.
But we got a bit of a gift this year from the government.
What? We did. Yeah, we're gonna talk about that gift right after.
Rate the rates.
We rate the rates. Boom. So, before we rate the rates, we're going to try something this fine day.
We are. If anybody wants to call in and ask a specific question, we would love to hear from you. The number to call is 206-557-9103. That's 206-557-9103. It's very clear that this guy does not know any sign language.
No,
I don't know what that was.
It's the number.
But feel free to call in. We'd love to hear your questions. We always have lots of content for you, but hearing directly from you is going to get your questions answered.
Absolutely. That's one of the key things behind putting together this podcast. Darcy and I, we have really candid conversations about topics that come up every single day with our clients. Yep. And I know those burning questions are out there. Maybe it's still keeping you on the fence about buying a house. Maybe it's keeping you on the fence about selling a house.
Yeah.
Whatever fence you're sitting on and you got that burning question, please use that number one more time, Darcy.
206-557-9103.
Perfect. And give us a call and we'll answer your question live right here on the show to the best of our abilities. So with that being said, we're going to jump into Rate the Rates. There is a lot of news out there because inflation is here. Inflation this, inflation that. Inflation has a tendency to have interest rates go up, right? So it's no secret that rates have been at historically low lows for the last 2.5 years. And right now they're hovering just above 3%. So if you're out there looking to either buy a house and say, oh, wow, it's over 2.5%. I don't know if I want to do that. It's still historically super low. The other thing to keep in mind, for those of you that have been sitting on the fence thinking that I'll just wait until rates hit the rock bottom. We hit the rock bottom, folks. If you're looking to refinance, pull that money out. Now is the time to do that. If you're looking to refinance and get out of that 4%, I had a handful of people call me over the past month, call the team, right? So there's myself, Chelsea, and Jamie. There's lots of people still in the 4s. You guys, if you're holding on to your mortgage statement and it has a 4 on it, you need to give somebody a call. Give me a call. Give somebody a call. somebody that cares, I care. So give me a call because that's a huge rate. Anyway, rates are still historically amazing. So you should not let the little tick up out of the 2s into the low 3s prevent you from doing anything in the mortgage and purchase market because it's still awesomely cheap.
You know, I saw this morning on the news that even though rates have gone up, the number of applications has gone up also. So I think there's a number of people that are starting to get the clue that, rates are going to keep on going higher. Maybe I should get in before they go too high. What's your take?
Let's get really clear on what number went up. The purchase applications went up.
Oh, okay.
Purchase application. Refinances,
Those are down.
Refinances are down month over month, like 30%, right? So, and that makes complete and total sense. If rates go up, refinances, they taper down. The purchase applications are rising. They're continuously rising month over month and year over year. And here we are. I don't know the exact number, but it's somewhere in the teens as far as year to date numbers year over year. We're 16 or 17% over the number of purchase applications that were put on the books in 2020. So though the refinance market might slow down, the purchase market still super healthy, and you have 17% more people this year putting in an application to buy a house. So
that's scary. That's so scary.
That's very scary because I don't know. Do we have 17% more inventory on the market?
Not even close.
Well, we got 17% more folks wanting to jump into that market. So, it's something that we have to plan for going into 2022 because it's gonna get even worse. I hate to say it, as far as price appreciation.
Yeah, which all right, well, let's get back to rate the rates because I want to go deeper into that, but let's do rate the rates.
Rate the rates good. Rates are still awesome. They're right in the low 3s per the Freddie Mac monthly and weekly survey. If you guys want to take a look at this, type in Freddie Mac mortgage survey, and the Freddie Mac mortgage survey pops right up, and you can get a baseline of where the market is. So it's a great resource to have out there, just to know if your rate is in that position as far as like, should I refinance? Is it still good as far as purchasing? I say yes on both of those. Talk to somebody on the refinance, purchase, get after it. So
okay, so on the purchase side.
'Tis the season for a deal, right, Darcy?
No.
Yeah.
No.
'Tis the season.
The season for a deal was last year at this time?
Or 2017.
Or 2011.
Yeah, 2011 was a good year to get in.
It was a great deal then.
Good year.
Guys, it's important that actually we have a client that he was planning on buying last year, and he thought he was getting transferred at the last minute. So we didn't put in the offer. Turns out he didn't get transferred, and now he's back saying, okay, same criteria. I want the same thing. And I have to break the news to him that the market's up 30 to 40%. So unless you raise your budget, you're not getting the same thing you would have gotten last year at this time. And because of that, everybody comes to me saying, I want a deal.
Mm-hmm. Well, I mean, there's a real perception out there that in December and January and February that, the deals are abundant because whoever's selling their house in the winter, they have to sell their house, so they should just be giving it to me. So what say you, Darcy? What say you?
I say in past years that has been true to a certain extent. Maybe like I have gotten into contract on the Wednesday before Thanksgiving or the Friday after Thanksgiving and gotten some pretty decent deals then. This year, no. I mean, even this weekend, I was doing a pre-inspection before putting in an offer. And while I was at the house, over 15 groups came through.
Wow.
And 2 other pre-inspections got started while I was there. And that was just a short period of time compared to the days that it's on the market. So I actually turned in that offer today. Fingers crossed. But we'll see. We'll see.
So what I'm hearing is we're still in the boxing ring, deep into the middle part of December.
Yeah. So, and I've heard it's it's December. There's still lots of multiple offers. No doubt about it. Lots and lots of multiple offers. Now, people come to me often saying like, oh yeah, I've been talking to another agent and we've been putting in deals, but they haven't been able to get me anything. What can you do for me different? And I'm certainly happy to help you, but agents' hands are tied by what you'll allow us to do.
Right.
So if you are a person that has a conservative stance with entering the market, I get it. I 100% get it. You don't want to chance earnest money. You don't want to chance all sorts of things, waiving an inspection or anything. I'm not telling you have to do that. By all means, you need to be comfortable with the choice. However, your offer's only as good as you allow it to be. I give you all the tools. You make the choice on where you are comfortable putting in the offer.
Yeah, and the client ultimately every time drives the bus.
They do.
Right? So
they do.
They get to drive the bus. They get to figure out what contingencies they want in that contract. And I mean, we've had a client. Let's go into story time.
Yeah,
because it's story time. Speaking to the client driving the bus, right? Clients come to us, and a natural progression is, they talk to Darcy and they say, oh, I love this price range. I'm looking for this in a house, blah, blah, blah. And then we get together, Darcy and I, and we get them pre-approved on the mortgage side. Well, I get them pre-approved.
Yeah,
Darcy's not licensed to do mortgage, folks. So anyway. But I get them pre-approved, hand them back to Darcy, and then they go out shopping. And that's really where the rubber meets the road, because when ink has to hit a page, people get a little tense.
They do. It becomes real. Actually, I was out on Sunday with another set of clients. It's their first time home shopping. They found 2 houses that they liked. They're really excited. We went out to lunch after looking at the houses so they could really get a good feel for what the process was. I walked them through the whole process. And as they were there, both of them slowed down on eating. And one of them started sweating. And they were like, this is feeling real now. And they started asking really detailed questions, which I love when you ask detailed questions. That's perfect. It means you're really feeling the weight of it and considering how it's going to change your life. I want to make sure we're doing the right thing for you. But it doesn't get real until you put pen to paper. And right now, they have an offer turned in. Also, I've got 2 offers turned in today that we're waiting to hear back on. And I'm getting texts from them left and right, like, oh,
what'd you hear?
Have you heard anything yet? Have you heard anything yet? So, fingers crossed.
Yeah, fingers crossed. And so, getting back to it, we pre-approved this couple in the very beginning of the summer months. I want to say late June.
Yeah.
And so we got them out shopping, and they made offer after offer after offer.
Almost every week.
Almost every week, yeah. And every iteration of offers was getting a little bit more competitive and a little bit standard practice, or I don't want to say standard practice. It was getting more competitive.
Yeah.
Right? So buyers just know this. In my opinion, and what we see is that contract, that full contract, it's there to protect you, right? And today, Darcy, are we submitting all those contingencies as a buyer?
No.
So some buyers go through this process, right? They okay, I'll take this contingency off the table.
Yeah. So they start off with, I want every protection there is.
Right.
Like, I do not want to lose a dime, and I want to be able to get out of the contract at the last minute if I need to. That's not going to get you the house. And that's just the market right now. If it's a buyer's market, that's different, right? Yeah. But that's not going to get you the house these days. If you're going to get the house these days, unfortunately, you're going to have to do things like do a pre-inspection so you can then waive your inspection, or possibly waive your financing contingency, or possibly release earnest money early, or waive the appraisal. There's so many different options. I have lots of tools I can share with you. But this particular couple that Kate's mentioning, They were very close to the vest at first and very conservative. And every week, it's like he would let a little bit go, little bit go. And I truly feel like everybody ends up with the right place for them.
Yeah.
I've seen it happen too many times. I think they ended up in an amazing place, a great neighborhood that's perfect for their family. However, when he says to me, gosh, if I had just done all of these things
on the first house
4 months ago, we wouldn't have had to go through this.
Yeah.
And it is what it is.
Yep. And it's your own unique home buyer journey. And, it's not real until it's real.
It's true.
I'm going to say it's like having babies. I've never had a baby.
It's nothing like having a baby.
But it's like, well, the expectations, right? You have these expectations like, oh, the home buying process is going to be easy. And you walk into that. And I thought parenting, and this is my naivety. I'm like, parenting, we got this. Of course, it's human. We got this. But then you get there and you're like, oh, wow, this is intense. So home buying is intense right now.
So I've got good news for you, ladies. It's nothing like birth.
Perfect.
Nothing. You'll be fine. We'll take care of you. Absolutely fine. Maybe it's nothing like birth. But yes, I see what you're saying.
Yeah.
That it is a smooth process for some people that's very painless, and other people it's a lesson. Yep. Unfortunately. And agents oftentimes refer to the first offer now as the practice offer.
Oh, what?
Yeah. Because they're just getting familiar. The client's just getting familiar with what decisions they have to make.
I did not know about this practice.
You didn't?
Offer. No, is this like your warm-up swing on the golf course?
Like one of the offers that we're putting in today it's the first offer that this client's putting in. And I told him, I said, listen, we're putting in this offer. You and I both know that you're probably not going to get it because you're not being very competitive in this. But I want you to go through it anyways because you like the house. And you need the practice of that pressure sitting with you and practice on making those decisions and see how you feel. So it's a practice offer. Now, if they get it, they'll be thrilled. Don't get me wrong. They want the house.
Well, that also helps you get all the technology dialed in, right? The e-signing and all the other paperwork.
So my process, and you haven't been through this part with me. I've sold places before, but I haven't bought a place with you before. Yeah. My process is I sit down with them online on Zoom, and we go through the buying process. I explain what all the terms mean. I explain how we go through it. Then we actually go out and look at houses. Once we find something that is interesting, I write up the offer as best as I can, and then again, we either get together in person or we get together on Zoom. And I go paragraph by paragraph explaining every single piece of the contract because these are binding contracts. You need to know what you're signing. Mm-hmm. So once we get there, I ask questions and explain how they interact with the rest of the contract in order to get you to the type of contract you want to be signing. That's kind of how the process works.
That's awesome that you take the time to go through every paragraph. I mean, each one of them is a protection that they have to choose. Like, am I in on this one or am I out on this one?
Right.
Right.
And, it's so funny how many times I've had clients that have bought houses before that say, no agent has ever gone paragraph by paragraph and explained the contract to me before.
Gosh, I'm going to have to buy another house with you. So
you better.
Paragraph by paragraph with me. Nice.
I've done that for you on the sell side.
Oh yeah, definitely on the sell side we've done that.
Right, but
so it's 'tis the season for no deal.
No deal
on the buyer side. 'Tis the season for a great deal for the sellers.
Great deal for the sellers. Most of the time.
We always talk about the buyers, like, oh, it's so tough for the buyers.
Yeah.
Like sellers just be sitting back, like, yeah.
No, this is a misconception.
Okay.
People think if it's really hard for buyers, then sellers can just put whatever number they want up on the house. They don't have to do any repairs.
Yeah.
They just sit back, eat bonbons, and make money. That's not how it works.
Never mind. I don't want to sell that.
No.
I thought that's how it was. If I can sit back and eat bonbons and just
No, unfortunately, that's not how it works. How it works is we want you to make the most you possibly can for your place. In order to do that, we need to get the property in the condition that's going to allow us to get the most money possible. Right?
Gotcha. So maybe a little elbow grease.
A little elbow grease, a little bit of staging, a little bit of this, a little bit of that. I mean, staging can make a difference of $100,000.
Oh my
in a
gosh,
house,
yes it can.
right? So,
oh my. Just look at some different markets. It's funny because we started. My wife and I were looking for different Airbnb and vacation rental properties, and we started looking in different markets.
yeah.
There's some markets that don't stage anything, and it looks sad. The house, I would not want to move into some of these unstaged houses. It's just like, the lights aren't even on.
Welcome to this 1980s apartment. Yeah. I mean, that's what it feels like when you walk into them. You're like, oh, it smells a little bit. Did somebody die in here?
Is that gold carpet? That's gold shag right there.
Staging, yes, it costs money. I'm not saying it's cheap. But as I've put it to many of my clients, okay, if for this particular house, if it's going to cost you $3,500 to stage, I'm not saying that that's cheap. But if you make an extra $100,000, I kind of think it's worth it.
$96,000.
But they make the choice.
Uptick.
Not me. I give choices out. The client makes the choice.
I'm sure you go through this, but let me just be that client. But Darcy, the market is moving so hot right now. Why should I waste my time, your time, my money? Why should I do that? Do you have that? You back it up with like analytics, like
absolutely
staged house, unstaged house?
Yeah. So I go through and I show examples. I have examples of homes that I've sold before that I have the pictures that are not professional pictures, not staged, whatever it is. And then I show them how we did it. And I have them look at them. Which one would you pay more for? Because the houses that you're up against are going to look like that.
That's a good point.
Do you want to leave money on the table?
Yeah.
Or, if that's not working, we'll go out physically and look at houses that are comparable to theirs. Okay, so you're telling me you want to list your house for $1 million. This is $1 million house. This is $1 million house. How do you think they compare to yours? It doesn't take much.
Gotcha. Is there such a thing as listing catfish? Like can you catfish a listing picture? Can you? I deal with money. You guys get to look at all these cool pictures and different properties.
So yes, because
I'm sorry.
yes, you can virtually stage houses.
Okay.
And you're supposed to say house is virtually staged on the picture.
Right.
Right. But some agents don't do that. So I can tell by looking at a picture if it's virtually staged because I have the eye for that. But a lot of clients don't have the eye for that. So we'll walk into a house and they'll be like, oh, they removed all the furniture. Man, this is hard.
Wow.
And I'll say to them, okay, this is an example of virtual staging. So when you one day go to sell, let's talk about, pros and cons. There are times that I'll use virtual staging and recommend it. Like at the beginning of COVID, when we couldn't stage houses, virtual staging was awesome.
That would make total sense.
Yeah,
that would make total sense.
absolutely.
Great applicable use of it.
Or if there's a room that nobody knows what it's for, I might stage it one way, but then we'll have here's what it looks like as an office. Here's what it looks like as an exercise room. Here's what it looks like. And we'll have different examples posted on the wall of what it could be. Those are good examples of using virtual staging. But yes, it can be a bait and switch.
No one likes that.
Nobody likes
No one likes to get catfished at all. Whether it's a listing.
Is that from experience, Keith?
No, not at all. Thank God I never had to get into that pool, happily married. So, I think that does that wrap up 'tis the season? Is there anything else we're leaving out in the winter market? Because I wanted to hit the winter market.
Yeah,
because here
I
we
think
are.
We did winter
December,
market and more.
And more. Yeah, we did a little more. But that's what we do. That's how we do it, right? We give you what we're talking about and a little more. Yeah, always. Speaking of a little more, can I give you a $90,000 gift?
Yes, please.
No, I'll give it to you in what is been released last week, the new loan limits, right? We're going to change gears a little bit.
This is crazy, guys.
We're going to change gears a little bit and talk about, on the mortgage side of the coin. Some big news came down the pipe last week, and I'm super excited about it, and I hope you guys are too, because what happened was we have three major underwriters of mortgages. We have Fannie Mae, Freddie Mac, and FHA, FHA. I call it FHA. Anyway, so they all said, hey, we got to keep our loan limits up with the going market, and we got some sizable increases in loan limits. So
time out.
Yes.
What's a loan limit?
I was just going to go there. Oh, thank you. That's a great question, Darcy. Let's jump into that. So what the underwriters do, they come out and say, hey, houses are valued X amount of dollars in this area. The average house is going for this. We're going to set our loan limit where Fannie, Freddie, and FHA, they say, hey, we'll lend up to this limit. If we exceed this limit, you're going to have to find a different mortgage outlet. We're not going to underwrite the loan. You're going to have to go into the jumbo market. Yeah, the jumbo market. And so underwriters are great people, and I love our underwriters. And then like the jumbo underwriter is like the WWF wrestler of the underwriting world, right? They are like ripped up. They're looking deep into it. So we try to keep as many people in Fannie Mae, Freddie Mac, and FHA as possible, because the underwriting in the jumbo market, if we can avoid it, it's worth avoiding, right? Not saying that if you're buying that $2 million, $3 million house, you're going into the jumbo market unless you're putting down a huge down payment. And then we're going to talk about like rate of return, and we'll talk you out of a huge down payment.
Yeah.
But that's a different show. But the loan limits just went up in the Fannie Freddie world by $90,000. Over $90,000.
Huge increase.
Huge. $98,000.
Okay, so let's put some numbers to this.
I love numbers.
So for conventional.
So Fannie Mae, Freddie Mac, AKA conventional, AKA conforming, those numbers, and I'm going to say statewide numbers first, and then we're going to drill it down into the Tri-County area. Because y'all right here in the Tri-County area, you Pierce, King, and Snohomish folks, you special. You super special, right? So let's talk about the limit that's over the whole state and coast to coast, right? So if we go from the Pacific Ocean all the way to the East Coast and go touch the Atlantic, your loan limit in 2021 was $548,000 and a little bit of change, right? You jumped up to $647,000.
Now that is straight across the country without adjustments for, this city's more expensive.
Yep.
So that is anywhere in the country.
Anywhere from coast to coast. And actually Hawaii and Alaska. Yeah. So huge numbers. And then we drill that down just a little bit deeper. So Fannie and Freddie's, they're really cool cats, right? They go, hey, there's places like Seattle, and there's places like San Francisco and San Diego and Maryland and DC and all these other, I don't know why Alaska got thrown in there, but Alaska got thrown in there. Totally weird. Anyway, I digress. They say, hey, there's high cost living areas, and we need to have a higher loan limit for these folks so they can still access conventional lending through Fannie Mae and Freddie Mac. And guess what, guys? We went up to $891,000, up from $776. Boom. So the top side is pretty big, very big. It is the largest year-over-year increase that Fannie Mae and Freddie Mac have put into the market. And following suit is FHA. FHA went from a coast-to-coast limit, right? Regardless where you are in the United States, you had a limit of $356,000. There's some change on all of these. I'm not going to get into that weeds, but you get the big picture here. They went from $356,000 up to $420,000. Now, around here, King, Pierce, and Snohomish, that doesn't sound big.
Nope.
But I'm multi-state licensed. I work with a lot of folks that are going to Idaho, going to Montana, going to east side of the state, going to east side of Oregon, and that is a substantial difference when you're talking about Walla Walla, or you're talking about Yakima or the Tri-Cities. To go from 356 up to 420, that opens up a whole world of lending options for FHA.
It
Super
really,
huge.
really does. And please keep in mind that these are the values that you can borrow.
Yes. These are the values you're
This
borrowing.
is not the purchase price.
That's a great point. So now you stack up that purchase price, you stack up that down payment on top of these loan limits, whether you're putting minimum down at like 3.5% for FHA or 3% for conventional, or you're putting down more, right? So you're really getting close to touching almost $1 million purchase in the Tri-County area in King, Pierce, and Snohomish. You're getting really close to $1 million purchase and putting down as little as 5%. That's pretty crazy to me.
It is.
One thing that I got to throw this out there.
Yep.
Loan limits are based on county, right? So these are for all of our county line lookers, right? So if you're on the county lines, if you're down in Pierce and you're looking in South Pierce County, and then all of a sudden, oh, dang, did you see that listing down in Olympia that popped up? Super sweet. It's right in my price range. I want to go grab it. When you cross that county line, you're going from high balance area down to regular loan limit area. So you're taking a huge haircut, like 50% of your loan capacity, you're taking in a haircut. So definitely if you're in a high cost area and you're shopping in a high cost area, so this is when you're going north or south of either south of Pierce County line or north of the Snohomish line into Skagit, you have to be aware that the second you cross that line, your world is a-changing.
Big time.
Big time. Same going east. If you're looking on the east side of the counties, and then all of a sudden you kick on over to Kittitas County, and then all of a sudden your world is a-changing again in a big way. So
this is another reason why it's super important that your lender and your realtor have a good relationship. Because I know when my clients are searching FHA,
Yep.
I know why they're searching FHA, and I know what the limits are. So if we cross a border, I know, like, hey, guys, we don't even look at this one because you're not going to be able to bring that loan limit with you. Or, yeah, we can look at that one, but you're not going to be able to do it FHA. You're going to have to switch it up. Not that I'm giving loan advice. I just know enough about
Yep.
the situation to have them talk to this guy or somebody on his team to make sure we're not wasting our time looking at something they're going to fall in love with and then can't purchase.
we have found in our professional careers that no one likes to waste time. So yeah,
Shocking.
we like to work together.
Shocking.
So we're not wasting your time, not
Yeah.
wasting our resources. And at the end of the day, our goal is to get you into that house. So let's make that happen.
Yeah.
With the good comes potentially bad, right? And so here's what is really interesting to me with the loan limits increasing, right? That means there's going to continuously be price pressure up,
Yeah.
right? This allows more buyers to increase their budget because there's lots of buyers out there, guys, that are just hitting those loan limits and they're stopping, right? So, hey, I hit the 776 high balance loan limit. I can't go above that because I only have 5% to stack on top of that. Now that person just became a $891,000 buyer and stacking their down payment on top of that. So you're going to see, for all you doomsdayers out there that still think the housing market's going to blow up and implode and blah, 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 we're going to have all this recession again. We very well could have recession, just on a side note. But as far as a depreciating event in the mortgage and real estate world, I do not see that coming in any way, shape, and form.
There's no crash coming.
There's no crash
anytime
coming.
soon.
Yeah. So with this increase in loan limit and capacity, there's going to be more price pressure, especially in that already turbulent $600 to $1 million price point.
I'd say 600 to 1.5
Okay.
is crazy competitive. And I know we're throwing a lot of numbers out there and everything, but know that it gets really complicated fast because every single different vehicle you could use for a loan has different qualifications. Yep. So whether they require so many months worth of reserve money in your bank account, whether they require a different debt to income ratio. I always do that. Debt to income ratio. Whether you're switching different products means switching a whole bunch of different things. And this is where the lender really makes a big difference because he knows those inside and out, as does his team, and can help us find the right place for you within your needs.
Amen to that. Absolutely. Now, I want to take this whole loan limit one step further.
Ooh, let's do it.
I'm a house hacker at heart. I love helping people house hack. And one way that they can do that is buying multifamily properties.
Yeah.
So a lot of folks, and the single family resident house and income limits and this and that, they get a lot of news time. They get the spotlight.
Yeah.
And all those duplexes and triplexes and quadplexes, they're just out on the sidelights.
There's not any of them out there.
Well, there's that too. There's not many of them being sold because guess what? They're cash flowing like a mother.
Yeah.
Boom. So no one's wanting to sell them, right? So if you got an asset that's performing amazingly, it's appreciating at 20%. Can we say 20%?
Low side, yes.
Yeah, 20%, and you're getting plenty of income from the units because rents have gone up too. There's not a lot of them hitting the market. But what I would like to bring to the table is a lot of people don't know that there's different loan limits per the number of units in the property.
Correct.
Right? Everybody hears about the single family loan limit. Duplex is a higher loan limit. Triplex is higher than a duplex. And guess what? The fourplex is the highest one out there. So I wanted to share that with you guys because a little known house hack is this. Buying an owner occupied, you first time home buyers out there, you millennials out there that want to do real estate right. And if I could go back and talk to my 25-year-old self when I bought my first house, I would have not bought a single family residence.
You would have bought something that you could have multifamily in, live on one side, and then rent out the other side.
That's what I would have done.
And eventually move out into a family, a single family home.
Yep.
And rent out the whole thing.
Bingo.
I love that idea. I mean, I think it's fantastic. The problem is finding it.
It is. It is a problem to find it. But
Keith's like, that's your problem.
That's your problem? My problem is I'm an enabler. I want to enable you and let you know that FHA, if you wanted to go move into a fourplex, the FHA loan limit for a fourplex in King County, do you want to take a stab at this, Darcy? Do you know what it is?
Fourplex, no.
FHA loan limit for a fourplex in King County is $1.7 million.
Okay, so am I just going to carve out an extra bedroom and bathroom of my house and claim it's a fourplex?
That would be
illegal.
That would be an ADU, and you would need to talk to your municipality.
You can't do that.
And your authority there in your wherever you live. Are you incorporated or are you out in the boonies? Are you unincorporated?
I'm in city.
You're in city. Yeah, so talk to your city. Each city is different. My favorite, shout out to Shoreline. You guys turn the screws up there. Anyway.
They definitely do.
That's a whole nother story.
But to that point, I mean, even though it's still a single family home, single family home with a approved mother-in-law apartment, those are hot, man. We have so many multi-generational families in this area. Those go for big bucks.
And they're not considered duplexes. I want to be very clear with you. It's not considered a duplex. Nope. Ooh, that'll be a good show. You guys were going to talk about what makes a duplex and what makes a single-family residence a single-family residence. Not now.
Next time. I also want to mention that he said fourplex.
Fourplex.
He stopped there because above that,
there we go.
Commercial.
Commercial, yes.
You get above that, it's a commercial property.
In the fine state of Washington, once you get above 4 units, it's considered commercial. And little known trivia, where is residential property up to a 6 unit still considered residential? Anybody?
No.
New Jersey. So.
Interesting. I did not know that.
Little tidbit. Anyway, I digress. If you want a house hack, I love talking about house hacks. We can take that offline. Ping me, DM me, whatever you want to do. Share this. Get all your house hacking friends together, and we can help you out. So that's really the big news in the mortgage world in December is that the loan limits went way the heck up there, and it's going to continue upward price pressure into next year. So there ain't going to be any appreciation slowdown in my world, in my perception.
No, there's not. And let's talk about this. So applications, as you said earlier, are up for home purchases. 17%.
Bam, year over year.
This is November, December, the slow market.
Yeah.
I can't tell you how many people are like, oh, I'm going to start looking after the new year. It happens every year.
Right.
But you know how many people are going to hit that, right? So it's hard to get your offer accepted right now. It's not going to get easier. I don't say this to scare you. I say this to prepare you. In the event you are looking at buying or selling, you need to talk to realtor and lender early on so you can be mentally prepared, financially prepared. And on that, you know, FHA is tightening things up as far as conventionals tighten things up. Sorry, my bad.
Yep.
Conventionals tighten things up as far as getting people approved.
Yeah, they have. We're feeling it in the lending side. So at Loan Depot, I do my team and I, the three of us, as well as I'm managing the region with a great group of leadership over there. And we've noticed over the last 4-6 months that what we were getting done through Fannie Mae and Freddie Mac at the beginning of the year and in 2020, they've changed their underwriting parameters.
Which means conventional, by the way.
Yeah. So Fannie Freddie conventional lending, they're tightening down as far as what they're willing to take on as risk. I really think we got a huge shot in the arm. I think they opened up a little bit of the lending guidelines as we went into COVID to allow people to take advantage of the great rates and allow people to put their households in a great financial position as we were working through the beginnings of COVID, not knowing where the end was in sight and all that good stuff. We've seen a progression, like I said, over the last 6 months that what we were getting done at the beginning of the year and in 2020, that they're not giving us the approvals anymore. So what happens when you make that loan application with us is we send it through an automated underwriting system, AKA an AUS, right? So an automated underwriting system happens, and that gives us a yes, Fannie Mae, if you told the system this and you can document it, Fannie Mae or Freddie Mac will buy your loan. That's not happening as regularly as used to.
So let's put an example to this.
Okay.
If somebody used to come to you with like a 650 credit score.
650 credit score, purchasing a house with 5% down, right?
Yep.
Maybe a first-time home buyer, maybe not. But they got 5% down to put on a house, and I could get that done in 2020.
So
right?
That would go through the underwriting system.
The automated underwriting system. As a conventional loan, AUS said, hey, yep, just document what you put in here for income, assets, and credit. We're good. Nowadays.
Same scenario today.
Nope. Fannie Mae, Freddie Mac doesn't want it.
What's changed? They want a higher credit score, or they want more down payment, or both, or?
They want a higher credit score.
Okay.
Is always the number one driver that I've seen in my experience. They say, oh, credit profile is insufficient for this amount of leverage. So then they say, okay, either get a higher credit score or put more money down.
So you have your choice. Mm-hmm. I mean, you get your credit score up to 700, you got a much better chance of that 5% down, or you can just get more money,
right,
and keep that lower credit score.
Which the majority of people end up pivoting to FHA, and so Darcy, you're going to see a lot more FHA pre-approvals next year, and so is the industry. So for those of you that do have to pivot from conventional and go over to FHA, you're not alone. Everybody in the industry is going that way.
Let's talk about that, though.
Yeah.
Because as the buyer, you think, there's another way that I can get this accomplished. Who cares if it's conventional FHA? The listing agent cares. Mm-hmm. Thus, the seller cares. If I have two offers, practically the same, one's an FHA and one's conventional, I'm going with the conventional every single day because the FHA has a more strict set of rules for the appraisal, etc. So even if it's a little bit less money, mm-hmm. the conventional is going to be the way to go because our ultimate goal is to get the house sold.
Yeah.
right? So that's gonna
from the listing side of the point, yeah,
right.
totally. That's a real deal.
It's gonna make it harder for buyers to get places if you're FHA.
Yeah. And like I said, on the flip side, there's going to be a lot more FHA offers out there because conventional is not doing so much. The other thing that is coming full circle is that they became lenient in 2020. They're getting tighter. The other thing that's playing a big part in that is that the Federal Reserve is tapering and starting to slow down how much mortgage-backed securities they're buying on a weekly basis. Okay. So I think that has something to do with it too. They want to increase the credit profile of the new paper coming to the market.
And I get that.
Yeah.
I mean, there's so many different things that move these markets. It's ridiculous. And even though we will see more FHA approvals next year, frankly, in King and Snohomish, it doesn't mean more are going to get accepted because the profile in this area is there's just not a lot of FHA.
Yeah.
Which affects
we're going to change that
things.
in 2022. Here we go.
Affects
Here
so
we go.
many things.
And we'll see how that plays out. Stay tuned. Fannie Freddie could come back, conventional could come back and say, hey, we need to open up the pipeline more and reinstate those automated underwriting systems. But we shall see.
Yeah. You know what else? We didn't mention this earlier, but I saw recently a case. Remember during COVID?
Okay.
Where there was lots of...
Wait, hold on. Are we done with
no,
COVID?
We're not done. No,
okay.
No.
So remember at the beginning of COVID.
Like a year ago, beginning of COVID / middle, I don't even know when COVID's going to end. So a while ago in COVID.
Yeah.
When they were allowing drive-by appraisals.
Right.
Okay. For those of you out there that don't know what that is, because everybody was nervous about people going into houses.
Very nervous.
They were on occasion.
Not only nervous about going into houses, some of the appraisers were saying, I'm not going into some stranger's house. I don't know if they got COVID or not. I ain't going in there.
Yep.
So it was really both sides of the coin. We're saying,
absolutely.
We ain't going to a house.
So the bank wasn't ready to say, oh, yeah, we'll just let that go through. They still wanted some confirmation that the house was, I don't know, standing.
Yeah. Standing is a good thing. We like standing houses.
So they would do what we referred to as drive-by appraisals. Mm-hmm. Literally, the appraiser would drive by the property, take a few pictures.
They do have to walk the exterior.
Okay, walk the exterior.
So they have to walk around the outside of the house.
Right.
But they don't set 1 foot inside the house. Not at all.
What we're seeing now is things that got last year sold with even things like an FHA.
Because they didn't go in the house.
Because they didn't go in the house, they were approved. They go on the market this year.
Yeah.
They don't even get approved for a conventional because of the state of the house.
Yeah.
And this is only going to happen more and more because most people are not selling 1 year later.
We've lived this, you guys. This is not a pretty situation.
And then the person that's selling it feels like they got robbed because their appraiser didn't make the seller do certain things when they bought it.
Yeah.
And they're getting stuck with it. So just know that that's coming down the line too.
Yeah. So if you bought a house, if you bought a house and you're looking to sell it, you bought a house during early COVID, and it's super important for you to go through your due diligence, sit down with Darcy and say, hey, what has to happen to this house this is coming full circle to how we started the show. How do you get this house in the best presentable shape that you're going to get the most money out of it? So amazing professionals make the difference. Absolutely.
They do.
We're getting very close to time.
We are.
And we haven't myth busted anything. Which
I
means
forgot about myth busting.
We got a myth bust.
My bad.
Hold on. Got to put these bad boys on.
Gosh, my favorite part of the show.
You didn't wear these last week, and I was a little grumpy with you. I know. I'm going these Santa.
Okay.
Which one? Isn't that? Yeah. So, it's a festive holiday MythBusters. Oh, hold on. Put them back there. Oh, there we go. Okay, here we go. Oh, I like the headphones because.
Yeah, I kind of like the headphones too.
Okay.
We can hear better with the headphones.
Yes, we can hear much better with the headphones. If you tip your headphones back and go like that. Now I got Frosty the Snowman. There we go. There we go. This is quality podcasting, people.
Mythbusters.
Mythbusters.
Myths in
Hey, Jay,
disguise.
make a note. We got to get a jingle. A
Yeah,
Mythbusters jingle.
respectful.
Something. Dun, dun, dun. Anyway,
Hey, who can qualify for an FHA loan?
first-time home buyers. Only first-time home buyers. Myth busted. Boosh. So
People really think this all the time.
all the time, and it struck me in the face, and it hit me 3 times this past month since our last.
Good thing you were wearing those safety goggles.
I know. Ooh, look, you're good. I had 3 different people that I pre-approved this past month all say, we talked about, have you thought about FHA and conserving capital and putting the least amount of money down? And they said, oh, you mean go FHA? That's a first-time homebuyer product. I'm not a first-time homebuyer. This is our next house, blah, blah, blah. Or we sold a house and then we're going to go buy another house. Guys, the myth today is FHA is for everybody. You do not have to be a first-time homebuyer. So many people out there that think FHA is only first-time homebuyer, only bad credit, only this, only that. FHA is an amazing tool to help you get into a house with 3.5% down, regardless if you're a first-time home buyer, second-time home buyer, third-time home buyer, however many you can have infinity home buying experiences and still qualify for an FHA loan based on that criteria, right? Of course, you got to go through income, assets, and credit and all that good stuff like any other mortgage.
Right.
But FHA is not a first-time home buyer program.
It is
It is.
a home, an owner-occupied product.
Correct.
You have to physically move into that home.
You have to move into that home within 60 days of closing the loan.
You certify.
FHA will come knock and say, hey, do you live here? Yes or no? Do you live here?
I do live here.
So it goes back to the house hacking. There's a lot of folks that use FHA to buy multifamily, and then they say, oh, yeah, I'm going to live here, put down their 3.5%, and then turn around and rent that unit out. You need to live there for the first year. Once you get past that first year, whatever you want to go do with your life, you go do with your life.
Fine.
Get on with your bad self, all that good stuff.
Absolutely.
But in that first year, you got to live there. That's what you're signing up for. If you, I hate to say this out loud, if you actually read the mortgage that you're signing, most people don't still. If you actually read the mortgage document, it says you're going to live there for the next year. Now, like every other thing in the world, there's exceptions, right? People get divorced. People have to move and relocate with jobs. FHA is very understanding of those life-changing events. So if you find yourself in an FHA loan, hey, I bought an FHA loan, I'm getting divorced, or I'm being relocated with my job, or maybe you're in the military and you used FHA as opposed to your VA benefit, right? You can relocate in those qualified instances in that first year, and there's no harm and no foul. But the big message that I want to get out today is that FHA in no way, shape, or form is a first-time home buyer program only. It's for all buyers.
Absolutely.
So, yeah.
It might be the best product for you. It might not be the best product for you, but it is an option.
It's a great option. So we use it a lot of different ways in a lot of different circumstances, and for many folks that are buying their second and third houses. So think about FHA. If you haven't thought about it, it may be worth a look. Give me a call. Love to talk about those options and figure out which program is absolutely right for you. But just know, please, if you're at that barbecue with your friends or you're over at the Christmas party at your family's house and say, oh, I can't do FHA because that's a first-time home buyer program. You point them right back to this podcast and you say, FHA, my friend, is not a first-time home buyer program. I heard it on Realty eXperts with Darcy Hardy and Keith Pitch right there. Share, like, comment, do all those things. Yeah. So
have a great holiday season, everybody. Look forward to seeing you in the new year.
Oh, the new year. Happy New Year. Yeah, Happy New Year, because by the time we're back here, it's going to be a new year.
I'm going to just go with Happy Holidays.
Here's
I'll say
2022.
Happy New Year next time.
2020. Sweet. Catch you next time. Enjoy, and thanks for tuning in.
Thanks, everyone. Have a great one.